Today, I want to talk about how a short seller just lost over $9 billion betting against certain stocks. I also want to talk about how Michael Lewis, the author of the film The Big Short, has said in a live interview that he thinks the stock market is a rigged game. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, as Zero Hedge tweeted, they've said huge bearish bets gone wrong cost Icahn $9 billion in losses. The article says regular readers may recall there was a time back in 2016 where Icahn emerged as one of the market's biggest bears, warning CNBC that a lot of companies were way overvalued and that he was very concerned about the market in the short term. It says not long after we first reported that the bearish exposure of the billionaire's investment vehicle, Icahn Enterprises, had gone a record 149% net short. Now you may be saying, Tom, how exactly can somebody be 149% short? How can you be over 100% short? Well, obviously, if you're shorting on leverage and using other people's money to short, then you can be more than 100% of your own capital net short. As we know, hedge funds typically use leverage ratios of between 5-1 and 10-1, so Icahn was obviously shorting with leverage. Therefore, Icahn was obviously shorting on leverage, and that's how his short bets went against him so fast and so significantly. It says the FT has reported that Icahn admitted he was wrong to make a huge bet that the market would crash after the ill-fated trade cost his firm nearly $9 billion over roughly 6 years. According to the FT, Icahn Enterprises started aggressively betting on a market collapse in the aftermath of the 2008 financial crisis, and became increasingly bolder in subsequent recent years. He was deploying a complex strategy that involved shorting broad market indices, individual companies and commercial mortgages and debt securities too. At times, Icahn's notional bearish exposure exceeded $15 billion according to regulatory filings. Could you imagine a $15 billion short position restricted to one specific stock, like AMC or GameStop, for example? And that's why you can see that it's actually very plausible for these hedge funds and market makers that are even bigger than Icahn Enterprises to be taking giant short bets on individual singular companies. And that's why it's not incredibly far-fetched for even single companies like Citadel, for example, to be taking short positions on AMC and GameStop, ranging into the tens of billions of dollars per position. Importantly, Icahn Enterprises reported a total of $4.3 billion in short losses in 2020 and 2021. At the time, Icahn was likely betting against companies like GameStop and AMC, expecting them to fail, but obviously got bit by the meme stock run-up. It says as Icahn's short bets were margin called and drained billions of dollars from his investment firm, he ploughed nearly $4 billion of his own money into his company, and that injection helped keep the firm's internally calculated investment portfolio value relatively stable. And again, that's important because we can see that hedge funds do indeed get margin called on their short positions. These hedge funds don't simply receive a pass, many of them do get margin called. Yes, we haven't seen somebody as big as Citadel being margin called yet, but obviously as they approach closer and closer to that margin call position and fail their margin requirements, they too will be margin called. Again, Icahn exposed himself to another risk by taking out a margin loan that was first disclosed in early 2022. That loan from Morgan Stanley, against which Icahn pledged 60% of his stake in Icahn Enterprises as collateral. So basically, if Icahn gets margin called one more time, he's likely going to lose his entire company in the process. And it says again, these margin loans were used for years as the linchpin of the bearish thesis against Tesla. And obviously when the Tesla stock exploded higher, many of these bears were steamrolled. So again, there's likely multiple hedge funds out there using these same margin loans to try and short AMC and GameStop, and when these stocks next explode upwards, these shorts will be steamrolled and margin called. And I also wanted to show you this video of Michael Lewis saying the stock market is rigged.
What's the headline here?
Stock market's rigged. The United States stock market, the most iconic market in global capitalism, is rigged.
By whom?
By a combination of the stock exchanges, the big Wall Street banks, and high-frequency traders.
Who are the victims?
Everybody who has an investment in the stock market.
The insiders are able to move faster than you. They're able to see your order and play it against
other orders in ways you don't understand. They're able to front run your order.
What do you mean front run?
It means they're able to identify your desire to buy shares in Microsoft and buy them in front of you and sell them back to you at a higher price. It all happens in infinitesimally small periods of time.
So as Michael Lewis says, the stock market is indeed rigged by these high frequency trading firms that not only trade in front of you, but also trade against you in ways that you couldn't imagine. Again, Michael Lewis has written all of these books about Wall Street, including The Big Short, and clearly knows what he's talking about. But interestingly, it seems the Biden administration is pushing for a freeze on US bank withdrawals amid the decline in M2 money supply. Right now, the Biden administration is literally trying to stop you from taking money out of your bank account to pay your daily or weekly bills. It says hedge fund manager Hugh Hendry has warned that the Biden administration is mulling a freeze on US bank withdrawals amid the decline in M2 money supply. M2 money supply refers to a benchmark measure of how much cash and cash-like assets are circulating in the US economy. Obviously, due to the current banking crisis where people are withdrawing money from bank accounts to place in higher interest rate savings accounts or in money market funds, it's obviously causing massive issues for these banks. And as a result, the Biden administration is literally trying to place a withdrawal freeze on all US bank accounts. Clearly, the US is in a very dire situation and this current banking crisis is spiralling out of control. It's now not just impacting small regional banks, but also mid-sized banks and maybe even large institutional banks. And obviously, as the current situation and the current economy gets worse, it will lead to the stock market collapsing further, obviously leading to that AMC squeeze. Because as we saw, more hedge funds like Icahn and Icahn Enterprises will be receiving margin calls. As soon as these hedge funds fail their margin requirements and default on those margin loans effectively, they will be margin called and forced to close out of their long and short positions. Now finally, I also want to talk about and try and figure out the real reason behind the ALU Journey lawsuit. Crystal Ball tweeted saying, what was the point of the BlackRock funded ALU Journey lawsuit? The fact the plaintiffs agreed to the settlement is interesting. After accusing Adam Aron of manipulation, if they took a major issue with Adam Aron's plans, then why settle for just a few extra shares? Especially because, as I'm about to explain, the amount of shares that ALU Journey are getting as a reward doesn't even cover the legal costs they spent. He said is the real reason actually to get a snapshot or a true share count exposed in court. So Crystal tweeted saying between July 2021 and October 2022, ALU Journey went through $16 million of cash from BlackRock. ALU Journey regularly spends hundreds of thousands of dollars on lawyers and on legal advice, and at the moment will be spending significantly more. This is obviously just their legal expenditure pre-lawsuit, so I can only imagine how big their legal expenditure is now during the lawsuit. Now you may remember ALU Journey has around 0.01% of their total portfolio invested into AMC. With a total portfolio value of $916 million times 0.01%, that's total cash invested into AMC of only around $100,000. Divide that by the current share price, which is give or take $6, that's only around 15,000 AMC shares that they actually hold. With 15,266 shares, they only received 2,035 shares as a settlement. 2,035 shares multiplied by $6 a share is only a settlement value of around $12,000. I imagine ALU Journey's legal bills so far from the lawsuit already total into the millions. So ALU Journey created this massive lawsuit, spent millions of dollars on legal fees, basically saying that Adam Aron was destroying the company, only to be perfectly happy to settle for $12,000. It seems like they went to some massive intentions for such a very small reward. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.